beautifully dressed and immaculately coiffured. Now it's just amazing how we become more and more human, myself included. I mean, I had to shave and wash my hair and gel. but, but generally, I mean, if you're meeting someone that you see often on a regular basis, it's, Monday, you may look great. By Friday, you don't look so good. And it's just like, hey, it's okay. It's all right. We know each other. It's not a problem. Yeah, it's funny. I feel like we're getting a little bit more authentic, a little bit more real, a little bit more clear. The conversations are quick, effective, efficient, and wonderful, and a little bit more personal. I find that you get to know where people are, what they're doing, and how they're coping and managing life. That this adversity is bringing to all of us collectively at the same time. I don't think I've ever seen this where the whole world at the same time is facing exactly the same thing and dealing with it in most cases in a pretty resilient manner. So congratulations to all of you and to all of us for doing that.
Well said.
Cool. I want to give a shout out to some of our loyal customers. Dan is one of them. Pleasure to meet you, Dan. Thanks for taking time off from work. I see Raphael Diocno. I don't think he's on camera, but welcome, Raphael. Scrolling through my list here to see else. Jonathan.
Joe, thank you for shouting out. I mean, we'd love to hear a little bit more. It's 12:02. We'll give it 3 or 4 minutes. People are still coming. People are still joining us. Thank you for all of you for joining us and making it exciting. When I was talking to Miguel and Brad this morning and yesterday, and I was really more excited than anything, and I'm looking forward to this topic. It's going to be fun and exciting. So, but if there's anyone out there who would like to say hello and tell us a little bit about where they're coming from and why they joined us today, please feel free. Okay, looks like everyone's enjoying lunch and they just want to hear Miguel and Brad. That's what they want to do.
No pressure, right?
No. Hey, listen, so thank you. So what I'll let Brad. So the format of this meeting is it's linked to Lunch and Learn. We've heard from a lot of our customers, clients, and potential fans, our fans and potential detractors, that what they'd like to do is learn a little bit more. What we heard from them is that this whole area of crypto, digital assets, digital wallets is becoming really, really interesting. And we have a lot of people who are sponges and want to learn more. So if you're a client, that's great. If you're not a client, but just want to learn, that's even better. So just join us, spread the word. We're intending on hosting these Lunch and Learns every Wednesday from 12 to 1 Pacific time. And it's and to come for free. Enjoy it. Our next couple of events, we've already scheduled the topics. The next one is gaming and crypto, and I'll leave it as vague as that, but it'll be very interesting. The one after that will be something to do with neobanks and what's happening in that space. We're also planning a conversation with some interesting people in regards to SPACs, which blank check, and how they're and what's happening in that field. So as you keep a track of us, follow us on LinkedIn, download the app, check our website and check our events page, and we'll keep you updated on the events and dates as they unfold. Today, we'll also share with you the Eventbrite for our next event. So we'll share that on chat if you would do that, and then sign up for that one as well. And if there are topics that are interesting to you that we haven't covered or haven't thought about it, let us know what you're interested in. We'll find the experts, or we'll find people who are more knowledgeable than us in that space and bring them to you. So again, thank you for being customers. Thank you for being fans. Thank you for joining us. Thank you today to Brad and Miguel for putting the topic together. I'm going to now let Brad and Miguel take over. They'll speak for from 12:05 to about 12:45 or 12:40, depending on how things go. And then we'll have a space for Q&As. We'll have some time for Q&A and end at 1 or 1:05. So here you go.
Great, thank you. Brad, it might be good just to do a quick introduction as to who we are. I mean, there may be some folks on the line who don't know anything about us.
Okay, yeah, sure. All right, so, I'm Brad Kimes. I have a YouTube channel called Digital Perspectives. I've been covering crypto ever since the moment I pretty much found it and started a channel about 2 years ago. And it's, I tell anyone, specifically primarily covering XRP, but other cryptos. And I've just become, completely enamored by watching the growth of this space, of this new asset class that I believe is really going to become a new asset introduced in the traditional commodities market over time. And it's one of the most exciting things I think I've ever seen in my life. So I can't stop studying it. So yeah, Miguel, you go.
Yeah, likewise. So my name is Miguel Villas. I'm the COO at Lig2, but I have a background in crypto. My role before this was head of XRP markets at Ripple. And before that, I was at the CME Group where I ran precious metals products. And then in my previous life, I was a derivatives trader on Wall Street. So today we're going to be discussing, I think, 3 of my favorite topics: precious metals, which is near and dear to my heart, as I just mentioned. We'll talk a lot about crypto, and then we'll discuss a little bit about fintechs and what the intersection, a little bit of fintechs and crypto, and how they could be helpful to one another going forward. So. I think with that said, I think we'll jump on in. This is going to be, let me just share my screen. It's going to be, guys, relatively casual. So can you see my screen, guys?
Yes.
Yeah. Okay, good. Be relatively casual. It'll be a conversation between Brad and myself. Just 2 friends talking about things they love. So this is the high-level agenda. No surprises here, I don't think, given what I just said. We'll talk about precious a little bit, go through some of the historical trends, particularly in gold. We'll high-level cryptocurrencies, what they are, why they matter, what's the big deal, and then we'll jump into fintechs. So, Brad,
yeah,
here we have everything that's a precious metal. Right. And I think, I often get asked, what's the big deal with precious? Like, why are they so important, or why do they matter? Well, why are they a precious metal? And intuitively folks will tell you, because they cost a lot of money. But I think there's something important to understand about precious, that they're a particular type of chemical compound or noble metals, and that they don't react to the environment very well. And that's important because that means they last, right? If I put a bar of gold on a bench and I come back 1,000 years from now, the bench will be gone, but that bar of gold will be sitting right there. In fact, every ounce of gold that's ever been mined is still in existence. And that's the case for all the noble metals. So you can see how 5,000 years ago, during, in Egypt, the fact that a pharaoh's gold kind of hung around after they did, or was put into their sarcophagus to go with them, into the other world. And when it was dug up, it was still there, was kind of a big deal, right? So you start to see the characteristics of a store of value from its kind of chemical composition. And I've separated them on this slide here because gold is by far and away, I think, the one with the most macroeconomic properties, or in the history of finance, has been most importantly from a macro perspective. But interestingly, and I think gold is one of the oldest ones, one of the reasons gold is special is kind of trivial in a certain respect. It's because it's yellow and shiny. And I don't mean that in any facetious way. I'm not trying to be sarcastic. These other ones, some of them are shiny, some of them aren't, but none of them are yellow. which is kind of crazy to think. But it's like, but hey, if you're digging through rocks, 5,000 years ago and you come across gold, you're going to be like, wow, this thing is different. So it's literally that physical attraction and then its longevity that allowed gold to have this kind of other level importance, if you will. Sorry, guys. Now, these all have different uses. Silver for a long time was super important in photography. In fact, when I was at Morgan Stanley, Kodak was one of our big clients, and they would buy a ton of silver from us. Obviously, that went the way of the dodo bird with cell phones and digital stuff. But there is some real use there, and these other ones are more industrial: iridium, palladium, platinum, rhodium, and ruthenium. All have different uses, mostly in catalytic converters, in your car. So they're very useful from an industrial perspective. Gold, a little less. I think, we'll talk about gold's importance as a financial product, but gold kind of stands out from the rest of the pack as well because of its modern day use as a hedge for calamity, for inflation, for debasing of currencies, if you will. Sorry, Brett, I don't mean to talk at you.
No, man, you're not at all. I'm loving it. I mean, I don't know it's a big deal. I mean, look, you worked the gold desk, how many years were you there at the gold desk, working the gold desk?
CME, I was 5 years, almost 5 years.
Almost 5 years. So, I mean, you saw this every day. I think you have a chart we're going to look at not too far from now, which there it is right there. And, I'm excited to hear about that chart because, I mean, there is really a story of stories in the lines of these charts. Yeah.
So thanks for the segue. I mentioned gold has its kind of its sole pole position place, if you will, in terms of macro. This is, and I'll tell kind of a little bit of the story around that. This is a chart of cumulative returns going back to 1929 of gold versus the Dow. And I put the Dow up just really as a reference. And so folks could see kind of like what a mainstream investable asset has done over the last 80 years or 90 years or so. But if you'll notice here, nothing really happened until 1971 with either one of these assets, really. Right? I mean, it's pretty flat there for 40 years. And then all hell breaks loose after 1971. And you got to be like, well, what happened? What happened is we got off the gold standard, right? So in 1944, the height of the Second World War, the world got together and came up with Bretton Woods, right? And Bretton Woods, named after where they had the conference, was an agreement amongst nations that they were going to hold currencies stable within a band. I think it was 1%. And a lot of that was done through gold, right? By having your reserve, your currency backed by gold. So if you had to have enough gold in your reserves to basically account for all of the value of your currency. And, that kept things relatively stable. And unfortunately, it was a pretty hard system to maintain. And folks started to cheat a little, and they changed the rules a little. And before you know it, it was, well, we'll back half of it or 75%. And then in 1971, Nixon just basically said, we're off this thing. Like you cannot come to the gold or to the Fed and redeem your dollars for gold anymore. It's a wrap.
Wow.
And that unpegging of currency to gold basically meant that gold was free to be free. It also meant that currencies were free to be free. And that clearly it had an impact. Now, a lot of folks will say, well, yeah, that was the beginning of the end. That was hyperinflation. That's when the dollar tanked. And interestingly here, I mean, if you look at after 1971, it goes up from, it goes up quite a bit, until about 1979. And then it goes down for 20 years. Like, yeah. Pretty consistently.
Yeah, it does. I mean, it's horrible looking after like 1980. I mean, It just
Yeah.
bottoms out.
Right. And you're like, well, what the hell happened? Like, I
Yeah.
thought this was the death knell of all death knells. Well, a couple of things happened. Number one, the US was going through a ton of inflation, and Volcker basically said, we can't have any more of that. And they raised rates to 15%. And all of a sudden, dollar started strengthening a bunch, and, gold got hurt as a result. So that was one. But the other thing was the central banks now had a ton of gold. They were just sitting on this gold and saying, well, what do we do with this stuff? It doesn't back my currency anymore. What do I need this for?
Right.
So they start selling gold pretty consistently, just getting rid of the reserves. At the same time, the mining companies who are digging it out of the ground, because somebody's got to dig the gold out of the ground, and there's businesses around this, right? They start to say, wait. These guys are raising rates. Central banks are selling. We got to hedge our supply. I got to sell my stuff forward, right? I can't have exposure to this. The price is going down.
Right.
So you have no demand from the central banks. In fact, now you have supply from central banks, and you have supply from miners. In a high interest rate environment, gold suffers basically for 20 years.
Wow.
Yeah, amazingly so. And obviously, these other assets are starting to take off. And a lot happened. I'm not going to go into it now. Maybe we'll do another lunch and learn. A lot happened in the 80s and 90s, and obviously the aughts to create these returns and equities. Some of it having to do with inflation and low interest rates for sure. A lot of it having to do with just technology and other kind of macro changes. But I joined Morgan Stanley, interned there in '99, the summer of '99, and I was there when the Bank of England sold its last ounce of gold.
Wow.
To us. I think we were the last buyer of it. $250 an ounce.
And that was in '99.
That was 99. And then that was the bottom. That was it.
Yeah.
Right. A few things start to change. Obviously, we have September 11, right, which is a big macro shock, and that creates a little bit of a bid. Everybody's scrounging for gold as a hedge against calamity.
Mm-hmm.
But the big change, the big sea change for gold is 2004. So I mentioned these miners all hedging, right? Well, before 2004, if you wanted exposure to gold, you had to buy mining stocks. It wasn't easy for, and when I say you, I mean like a mutual fund or an endowment or a pension fund. If those folks wanted exposure to gold as a hedge or whatever, they had to buy mining stocks as a proxy because there wasn't an easy way for them to participate, right? Like a mutual fund is not going to buy gold bars and store them somewhere.
Right.
Not going to do it. So in 2004, the GLD comes out, the ETF. And Brad, overnight, the whole supply-demand dynamics of that market changed. So these funds are sitting there saying, I've had crap returns from holding gold for I don't know how long. And on top of that, you guys, the miners, how I've been investing, don't have any exposure because you've hedged it all. So what am I investing in? Just like managerial risk? I don't know like your stocks don't go up when the price of gold goes up. So what's going on here? Yeah. And gold had just gone up, which I think is the other thing, because of September 11th and the fact that the Fed had lowered rates to 0 on the back of that. There was a bullish sentiment, and the mining stocks weren't performing. So anyway, overnight, these funds start dumping mining stocks and start buying the ETF. Yeah. And man, like that. So you have that. There's no more central bank selling, and then the miners are like, wait. We're going to lose all of our investors because we don't have exposure to gold. I need to buy back these hedges. So in the span of it felt like 6 months, everything changed.
Wow.
And gold just went, well, look at it. I mean, it's gone. Right.
Yeah.
And it was that one thing. There was another big development was 2006, the futures contract goes fully electronic. That brings in a ton more liquidity, which is helpful to give it that, kind of that institutional scale, right? Gold is a relatively small market. It's not like FX, which is trillions a day trading. I think gold trades about 50 billion a day. So it the '06 helped, but really the game changer was 2004. And I mentioned this history lesson because I think it's important in the context of crypto, and we'll talk about it a little bit. If we're talking about the use case for crypto as an asset, it needs this infrastructure. Right?
Yeah.
It needs futures, it needs derivatives, it needs ETFs, it needs these things in order to be accessible to the investing public.
Absolutely. I think it's such a great point, Miguel. You know, you can tell how young the digital asset space still is because in large part, we don't have all of these products. And these are the tools that institutions use to invest into. And these are the things that they're used to in the traditional markets. They know how to make money with these things. They know how to hedge futures and ETFs in the market.
Well, I mean, and we'll talk a little bit about the PayPal announcement today. I'm so happy we're doing this lunch and learn today because of when that came out. But you're watching folks look at crypto, Bitcoin at the moment, but crypto broadly as reserve assets. Right? We had MicroStrategy a few months ago now. We had Square come out a few weeks ago and say, hey, we bought 50 million and put it into Treasury. They have to have ways to do that easily. And the bigger those funds, like 50 million is not a lot of money in the grand scheme of things, you know, for you're talking about a bank, or you're talking about, you know, PIMCO, CalPERS. Those guys need to be able to allocate 500 million. So these markets need to grow a little bit. Anyway, I digress. I'm getting off topic. So.
Oh, it's great stuff. I'm loving it, man.
All right, so that was my run through the history of Precious, and I recognize that it's a relative. It's recent history by the standard of gold, which has been around for thousands and thousands of years. But I thought that was a good place to start and a good segue for crypto. So, man, cryptocurrencies. Talk about a topic.
Yeah, this is one that doesn't go away, does it? I mean, you know, it's. I tell you, it's how I got here, right? I mean, you know, I was an investor in traditional stocks and things of that nature before I found crypto. So it wasn't like I was, you know, unfamiliar with investing. But I mean, when you start looking into this stuff, I don't know about anybody else. I mean, it was just like somebody grabbed me and just pulled me down a hole. It's like, and I don't even want to go back. It's just all consuming. All consuming.
No, I'm not. Look, I'm not. I can't say I'm surprised. I'm right there with you. Obviously, you know, I think it's important to talk. Let's talk a little bit about why these things matter at all. And I guess analogous to my comments around precious metals. You know, never. So, what is a cryptocurrency or a digital currency? In a very simplistic way, it's just a distributed database. So it is an accounting of balances. You know, Brad has 5 Bitcoin, I have 7 Bitcoin, and we keep those balances on this ledger. So, well, that doesn't sound all that special, right? You're telling me, Miguel, it's just a database, and who cares? Well, the interesting thing is that it's a database that no one person maintains. Right? So there isn't a consultant, or there isn't somebody in a company or a bank or a Federal Reserve or anything, a regulator, maintaining these databases. So when I send something to Brad through a distributed ledger, there's no trusted third party that's keeping track of what's happening. That's all happening through you know, a consensus algorithm. Computers are saying, hey, this happened. And obviously, that sounds super simple. It's much more complicated than that. But what it allows you to do is store value and send value without any third parties, singular trusted third parties. Right? I mean, you still have the network of computers that has to do the work in order to validate transactions. We'll talk a little bit about that right after this. But at the end of the day, I can send Brad whatever I want, and I don't have to ask permission. And no one can stop me. And I can walk out of my house with all of my wealth in my pocket, which is not easy to do with something like gold or cash, right? So that is for me, it was the kind of like, whoa, the paradigm shifting, like, wait, what? And it's still early. We still haven't quite and we'll talk a little bit about that as well, quite figured out what to do with that power yet. And, you know, these cryptocurrencies are definitely, look, it's literally where money and technology meet, right? And I think I've said this to you, like the most important thing cryptocurrencies have done over the last 10 years is gain value, because it's a massive sort of seal of approval. It's a vote of confidence, but it also makes them useful, right? Because you can do things now when something has value. Something doesn't have value, it's harder to do stuff with it. And we'll talk about that a little bit as well. Look, these cryptocurrencies, and I've put the big three up here, right? Bitcoin, Ethereum, Ripple. They have similar properties in that, again, they're permissionless, so anyone can open up a wallet, anybody can send to anybody else. You know, they're distributed, right? No one entity controls the network. As long as these networks stay up, they will be around for thousands of years, just like gold. So, you know, a lot of sort of numerous similar attributes. That said, they are not all the same, right? You know, Bitcoin seems like it is headed down the store of value use case, right? It's the first one. It's like the grandmother of crypto, if you will, grandfather of crypto, however you want to say it. So, you know, it's the first one. So it isn't as scalable, right? So it's a little slower. It bogs down when things are super busy because of, you know, the proof of work mechanism to validate the transactions. Ethereum has some of those same challenges, and they're, I think, still moving through a proof of stake, Brett. I don't know if you know anything about this, but I feel like that's been coming forever and it doesn't happen.
Yeah, I think you just nailed it, actually. Yeah, they don't have as I know of, a actual scheduled time yet, specific time for maybe a projected year, but yeah, it's supposed to move from proof of work to proof of stake. But I think there's I mean, I like all of these, you know, but you know, I think there's still a hill to climb here, even when they switch to proof of stake, because if you're locking up your Ethereum to participate in the network for rewards, you know, you just by default of everybody locking up to participate in the network, you're creating scarcity for the token and overall driving up the price of the transaction through gas fees on that particular network is the pretty much the macro discussion there of the next hurdle that has to be dealt with proof of stake once they get there.
Got it. Yeah, and look, this might be a good, just a quick high level, right? And sorry, I'll finish my thought on the three and then we'll talk consensus algorithms and mechanisms. And then Ripple, which is, you know, or XRP, which is the digital currency that associated with Ripple is really a bridge asset, right? So if you like, Bitcoin is being that store of value, Ethereum is now turning out to be kind of a smart contract platform or, you know, distributed computing power. And then XRP is now the, you know, kind of that bridge asset. The reason that is the case, and I say bridge asset, I mean, you know, going from one monetary system to another monetary system very quickly and easily, stably, efficiently. You know, so for instance, I'll give you an example because I don't think I'm doing a good job there. Let's say I need to send money from, you know, Europe to Mexico. I could use the old kind of Byzantine, you know, correspondent banking system where, you know, I may have to go euro, dollar, mex, and that could take a few days. Or I could take euros, buy XRP, shoot them over to Mexico, sell them for pesos, and be done. Right? Yeah. I could do that in a couple of seconds, right? So the reason that is possible is because XRP uses a particular type of consensus mechanism that is not proof of work, it's not proof of stake. It's one that, and I'm not gonna try to be David Schwartz here because why would I? But it's faster, it's more efficient when it comes to validating transactions. The proof of work mechanism is a little slower. It requires a network of computers to solve problems in order to validate blocks and then receive a reward. That's what Ethereum does right now, but they seem to be eventually, according to Brad, someday, some year, moving to proof of stake, which is more of a lottery system where I'm staking coins, I'm holding coins, and based on that amount or based on the age of the coins that I have, I will be allowed to validate a block. So those characteristics allow for different uses of these currencies. But look, we've rambled about how special they are, what a paradigm shift, like how great they are, but they're not as ubiquitous as Facebook. You're not using them every day, right? So what's missing, right? Why is it that, and look, these things aren't that young anymore. I mean, they're still young, but Bitcoin's been around for 12 years. XRP's been around for 8. Ethereum's been around for 6, right? Like, we're getting to the point where it's like, okay, we need to show some real adoption, and it's coming. But there are still things that are missing, right? I think number one, there's a scale issue, right? For Bitcoin in particular, like you run into the whole, like, I'm going to buy coffee thing. You're unlikely to buy coffee directly with your Bitcoin anytime soon. And even if you do, you won't be buying it. You'll be giving it to somebody, and then they'll be selling it for dollars, and the Starbucks will be picking up cash. But scale is an issue for sure, right? These networks are not built for millions of transactions a second. So that's a problem that we need to solve. In my opinion, when we're talking about what's missing for the markets, right? If we're talking about why aren't these things household names like stocks or bonds, it really comes down to regulations, especially in the States. You and I discussed this earlier today.
Yeah.
What is, like, 8 regulators?
Yeah. 8 regulatory agencies really that overlap when it comes to cryptocurrencies that have been cited by, like, Brad Garlinghouse or even Brian Brooks from the OCC. And that is a lot of overlapping. You don't have that in other countries. Miguel, talk about that a little bit.
Yeah. When you go to England, there's one regulator. It's the Bank of England. And they regulate all finance in the country.
There you go.
We don't have that. We got the SEC and the OCC and the CFTC and FINRA, and and then you have all the state regulators, right? So it's not easy, and each one of them will have their own opinion, and obviously there's turf wars and all that fun stuff. So we need to get the regulations in place. And look, some folks, and we were talking about Brian Brooks before, who's obviously a big champion for the space. He runs the OCC, one of the big the bank regulator in the country. And, he does liken this, he's used analogies in the past to, like, cell phones and the internet. And I'm cool with all of that. Except that regulators are going to treat this differently, because, like I said before, this is literally where money and technology meet, right? And you don't pay terrorists in cell phone minutes, but you can pay them in crypto. So, like, the regulators are going to care about that, as they should. I want them to care about that. So I think some of the same attributes that make this so special a technology also make it a real headache for regulators. So I get why there's so much caution, but it's a different beast. It's definitely a different beast. By the way, I was totally psyched to see Brian Brooks the other day on Twitter talking about the bridge asset use case for crypto. He was like, what did he say? He said, of course there's a use case. It's the simplest one. And he was like literally basically talking about XRP. It was great.
In fact, I have that comment here. Imagine if there was a single token that was recognized on both sides of the divide. When you receive it, you can cash it out into your local currency. And when I receive it, I can cash it out into my local currency without the need to change it. Miguel, now you were the head of XRP Global Markets. What if you had to just, what does it sound like he's describing there to you? Because I know what it sounds like to me.
He's designing one of the base cases for XRP is what he's describing. But look, and I used to say this at Ripple, and I'll say it here, and I'll say it forever. It doesn't have to be XRP. Like
Right.
that, you can do that with any cryptocurrency.
Right.
But you're going to be hard pressed to find one that's better suited for purpose than that, than XRP. Right?
Yeah.
It's definitely best for purpose. So anyway, but it's great to hear regulators talk about this in a really in a knowledgeable way. Right.
It is. I mean, imagine, would you have ever thought this would be a conversation talking about, agencies specifically here in the United States? I mean, talking
Yeah.
about crypto in this way?
Yeah. I think it's inevitable.
Yeah.
I think it takes time. Look, finance is, we'll talk a little bit about fintechs in a second.
Mm-hmm.
Financial systems we've cobbled together, like the world was not disconnected 30 years ago.
Yeah.
Right. The internet has changed the way the world functions. And I don't mean like governments, I mean like you and me and businesses. And it's all happened at such a sort of lightning pace. Finance has really struggled to keep up. And because of, like I mentioned, the things that one can do with money, some nefarious, finance is highly regulated, and that makes it hard to innovate. I think something like crypto, which came out of left field, born out of the financial crisis, the Cyprus bail-in in 2011, that's when I first heard about Bitcoin. That has forced, the whole financial world to be like, okay, whoa, like there's another way to do this. And I don't think our system today is fit for purpose. And we need to figure out how to make these two mesh, because one thing that's clear is crypto's not going anywhere.
Not at all.
Yeah.
It's funny you bring that up too, if I could just real quick.
Yeah.
The fact that you brought up Bitcoin, Ethereum, and XRP and kept it right there for one, they all are so uniquely different, those generations of technology, right? The way you pointed out in the beginning. And looking at the conversation of what you just brought up about regulators and where this conversation is with regulators all over the world, right? Some a little further down the path than others. It seems to me that this 10, 12-year journey into this new asset class here, we're approaching a new defining watermark, which is use case utility, because each one of those are uniquely different, Bitcoin, Ethereum, and XRP. Can you talk about that? I mean, the use case utility and being in this new kind of a turning point, right?
I think we are now getting to a point where it's like, there's no definites here, right? But it's more likely that Bitcoin will do this, Ethereum will do this, XRP will do this. Right? And I think regulators are starting to look at it that way. When you hear things like Brian Brooks's comments, I think it's the utility of them is where the kind of the rubber meets the road. You don't need 3 stores of value. You don't need 3 bridge assets. You don't need 3 smart contract platforms. I mean, you could, but as I said, do I need 3 internets? Not really. Right? So I think and we'll talk a little bit about kind of utility now with fintechs. I think, look, one of my goals for this today was basically, when people go to put their money in something, I think the most important thing that they can do is ask the right questions. And you try to get as much of the answers that the meaningful answers that you need in order to plop down money on something, which is a big deal. Right? We all work hard for our money. So one of the things that is always been important to me when I'm talking about like, what is this? What's this company doing with this thing, right? Or what does this company do, and should I jump in here? With respect to crypto, and there's been a kind of a wave, if you will, of adoption at the early parts, that 2011 to 2014, 15, where it was crypto, and it was all markets. It was market adoption. And then you had Mt. Gox and you had Silk Road, and everybody went like, whoa, no, crypto, no. Enterprise blockchain, right? And everybody was enterprise blockchain. And then 2017, it was all markets again, ICOs and all this stuff. And now again, we're into DeFi, right? The enterprise blockchain stuff is interesting, I think. And I would say that generally, if you're looking at a fintech company that says, hey, we have a blockchain that solves something, not that that can't be true. Sure, it can be true. But you really want to dig in there because blockchains require some real trade-offs in terms of speed and scalability, like we just discussed. And a blockchain that's validated by one entity is not a distributed ledger. It's just a database that one person maintains, right? So I think and we'll talk a little bit about the logos up here in a sec, but I've tried to put companies up here that I think are going to use crypto either in the background or as a product, or will give you access to crypto. But these are not enterprise blockchain companies in that they have a proprietary blockchain. So I have a bugaboo about that, clearly.
Yeah, no, but I get where you're going with it. Yeah, they have more purpose than just selling a crypto direct. There's a suite of products there, and it is one of the complemented products usually in that case of that business. It's a great point.
Yeah. Right. So I think where can value accrue? Where can crypto value accrue to a fintech, and where can there be that virtuous cycle? I mean, I think you saw it today with PayPal. Yeah. So PayPal, massive announcement today that PayPal is going to support crypto. And PayPal is like the old school fintech, right? It's like 98.
Yeah.
It feels like it's ancient when you look at like Revolut or Chime or these other things, or TransferWise. But there is kind of a tried and true fintech saying, hey, here is a product that my clients want, my customers want. They want to be able to hold and spend crypto, right? That, I think you'll look at these worlds kind of collide a little bit, right? With Kraken now becoming a bank, right? They're going to try to do the same thing. And I wouldn't be surprised if Chime somewhere down the road, and I have no inside information with respect to Chime and what they're doing, but I wouldn't be surprised to see them do something around crypto. Now, the other thing that could happen, right, is that these companies, and this is a la Ripple, uses technology, distributed ledger technology in the background. And you're none the wiser for it. It just happens to be that your service is better and your costs are lower and they make more money doing it, right? So that's kind of the XRP use case. That is, I think for me, the more exciting part of it, where these fintech companies are using now what's akin to a platform to streamline backend processes, or actually direct transfers or management of data or information, right? And this is a lot of what the Ethereum kind of smart contract platform is about, right? Ripping out some of the old systems and putting them on distributed ledgers. I think massive opportunities there. Just again, the other thing I like to make sure that people are asking and really digging in on when you're talking about a company that's doing something with a crypto or this, that. I think to date there have been some, I'm blanking on the word now, but some claims to massive change that is going to benefit everybody from like something like an ICO, and it's like, oh, we're innovating, and it turns out you're just like reg arb, or you're just ignoring regs. Right? I think, as I mentioned before, this is not a space when it comes to regulations. Crypto is not a space where you want to ask for forgiveness. Like, it's not. It doesn't end well, because the regulators deal with money.
Yeah.
And you want to make sure that if you're going to invest in a company that's innovating, that they're innovating in a way that's compliant. it's just important.
No, absolutely. Yeah.
Yeah. And I think that's, the ICO stuff, and we'll see, touch wood, DeFi doesn't run into the same challenges. I don't know enough about DeFi to opine, but.
Well, I will add on the DeFi side, I think it's amazing. I think it's going to be a huge part of this space for, decentralized lending, basically, for people to not have the intermediary and you to be able to lend against your own assets on a platform. The one thing I'd say is that right now, what we see for the model for DeFi is that the developers like Kava, Brian Kerr, shout out to all them and the stuff that they've done there, develop these platforms, but they don't really go as far as to think about what that could mean for regulators. I've asked Brian, and they worry about the platform working and it doing what it's supposed to. And then what you see in these early days is it attaches itself to an intermediary, like an exchange that has you KYC'd and AML'd already, like a Binance or something other like that. And now it becomes a drop-down feature for you as to participate in this DeFi inside of this exchange as an option to take your money and take a loan against your money. A one-stop shop is what it develops. Problem is, for me, Miguel, when I look forward and I say, okay, where are we at 3 to 5 years from now when everybody's gotten comfortable with that part of it as an option, but then they just want to go direct to the DeFi and not have a platform or what have you in between. Now are we skipping the KYC AML and is the regulator going to come out and say, well, no, I need to have a node on whatever you develop as a DeFi platform to regulate it, because if we're not going to have that AML, are the regulators going to see that experience like a dark web experience or Silk Road experience?
Yeah, no, it's a great question. I think TBD.
Yeah.
And maybe look, maybe that ends up being what doesn't allow for the full DeFi vision to come to fruition. It's just that one little last mile step.
It really is. It's like an
KYC
ICO moment. Yeah, that KYC is a big deal, right? It's
a big deal. It's a big deal. Okay.
Gentlemen, we're getting, I just want to give you a heads up on timing. We're getting close to that point where everyone's jumping in, wants to ask questions. So if you've got a couple of closing comments or some time to answer some questions, that'd be great.
No, I'm tired of hearing myself speak. So I will.
I did want to add one thing to build on your point, Miguel, on that last topic of fintechs, which is, PayPal from '98, it weathered the storm of the Great Recession. We saw Square birthed out of the Great Recession in 2009 and Venmo. So I just thought it was really good to point that out because we covered these fintechs. People see these metals and cryptos as hedges. And I believe in times of crisis, a lot of people see fintechs like this, like the ones you see it linked to, honestly, as also high ground in a time of crisis.
Yeah, they can be. I mean, I think
it's all a risk, right? But
it's all a risk. Yeah. I mean, I hear you. And I think out of crisis comes, that's when people get really creative. So I agree that a lot of good things end up coming from a crisis, but in the middle of it, it's tough to see for sure. Anyway.
Yes.
I woke up very happy this morning for two reasons. One, I was still standing vertically, actually for three reasons. Two is that I was going to hear Brad and Miguel today talk about something that's interesting. Third is I invested actually in PayPal a few weeks ago when they were talking about what they were doing in crypto, and it's up 6% today. That makes me happy. I'm going to have a steak dinner tonight, which is some bourbon. But one of the relevant questions, actually, I think at the last GIC, the Global Investors Conference, and I hope the rest of you have registered for that, we had, this is a precursor to the question. We had, I think, Greg Kidd, who's an early investor in several of the companies that Twitter, Ripple, et cetera, and he said there's been more discussion in the fintech regulation space and crypto digitization in the last 9 months than there has been in the last 200 years. And this goes to a question that came up during the chat, which was, I'm paraphrasing, or I can read it verbatim, but this question came on the chat section. It's like, how much of the current incline do you think is reflective? This is in relation to the chart that you showed. How much of this current incline do you think is reflective of the world running to this precious metal as a hedge? And if this world is running to gold for hedge, what happens when this huge population actually needs the liquidity of this metal? I'm going to also say that that is sort of relative and in tangential to the crypto world and what's happening there as well at the same time. And with the world economies finding or advancing liquidity into the environments because of what's happened. Talk to us a little bit about what you think is happening there globally and what the governments are trying to do.
Miguel, go ahead.
Well, it's interesting. So if you think about, so I mentioned the ETF giving folks access to gold in a way that they didn't have before, and that's one of the reasons you've seen the spike. That's access for everybody. That's everybody on this call, right? Everybody who's got a Schwab account, a TD Ameritrade account, but that's not everybody globally, right? Most people on the planet still can't buy gold in an easy way, but increasingly they can buy crypto in a really easy way, especially in places like Asia. Right? So I think one of the reasons I'm excited, I like the space because of what the technology allows you to do. I think there are some far-reaching effects that we haven't even contemplated yet. And we'll wake up in 10, 20 years and be like, whoa, that was a moment, when crypto became a thing. But as someone who's invested in crypto, I sleep well at night because I know that the penetration is tiny, and the penetration of crypto into everybody's life doesn't necessarily need a stamp of approval from every single person listing a Bitcoin ETF. Just don't need it, right? So I think when you start talking about what central banks are doing and, are these currencies globally going to be debased and is there too much debt? That is a really, really, really complicated conversation. I mean, that is not something simple. But what is simple is that if you have that fear, that is a concern of yours, crypto most certainly gives you an easy way to hedge some of that concern. And I think that is becoming more and more evident every day.
I would agree.
You can ask, whoever has a question actually can ask a question now rather than me reading it, because it's always a flavor when you have a question. So if you have a question, be respectful of whoever else is on the line, but go ahead. Does someone have a question out there?
I do. I have a question. My name is Jerry Hall. My question is for Miguel and Brad, in that with the PayPal announcement that they're going to add a certain select group of cryptocurrencies, I find it interesting that they picked the most expensive to transact in. You talked about Bitcoin being a store of value and how you interpret that.
Right. Do you want to take that one? Do you want me?
Yeah, I'll take it, Jerry. I mean, well, I don't look at it so much as that because it's the most expensive to transact in per se, although I'm sure that there's a payoff, obviously if they cost more to do business in. But I think for me, I just look at where they stopped short again of listing XRP, right? They listed all the other assets except XRP. And for me, my takeaway on that, Jerry, is kind of what Miguel had hinted to in the talk earlier, is that we don't have that designation yet. We don't have that classification yet. And I feel like when it comes to moments like this, a traditional company, because I mean, let's face it, PayPal's been around long enough to be a traditional payment app now, right? So I look at it like they don't want to upset regulators. If I was at PayPal making this decision, I would not want to make the decision to list something that had not had the clarity from those regulators. I would clearly yield to them and want that kind of clarity from them first, because I don't want to bring any heat to my doorstep just because I think it's okay and they haven't said so as of yet. So that's kind of my takeaway on what's going on. But with that being said, I remind everybody, Mr. Ahmed from PayPal last year testified in a congressional hearing that he could be using XRP for settlement right now for low value payments back end for PayPal and the 364 million customers if he had the clarity to do so. And that to me just lends itself to the same point of view of why they wouldn't list it for consumers to buy just yet, just like they're not using it to settle low value payments just yet.
Thank you. And Bing has a question out there in relation to, go ahead, Bing, do you want to ask your question? And then we'll go to Steve, who's got a bunch of things to say after Bing.
It seems like gold is a hedge, and crypto is attractive as a hedge as well. So they're competing in a way. As crypto gains traction, would you expect the value of gold to maybe soften a bit, go down?
Miguel, go ahead.
Yeah, I think relatively, I think if you look at, if the question is over the next 10 years, do I think that crypto will outperform precious? Yes. I can't say whether or not gold in and of itself will go down, right? I don't know. I know that there will be folks who cycle out of some of the gold and into crypto. I believe that wholeheartedly, but it's tough to say, in absolutes if precious will go down.
I mean, I'm just thinking that there's only so much demand for hedge, and if you have more varied supply, then the new kid on the block might result in the old stable asset having competition and therefore going down.
Right, but let's say demand for gold goes up 100%, but demand for crypto goes up 300%, right? Just because gold is still gonna be a hedge, right? And
yeah, well, that's a growing pie for the hedge.
That's right. Yeah, and I don't think. I mean, I guess there's a world where things remain so stable that Bitcoin or crypto ends up eating into that hedge pie, if you will. I think if the demand for hedges don't go up, yes, I would expect precious to feel some pain as a result of crypto adoption.
Yeah, the tailwinds for crypto would be its ability to be used beyond being a hedge, being a direct currency and having all that versatility. That would then give it momentum.
Yeah, I mean, I think, look, crypto is so young as an asset class. I think there is a ton of tailwinds just on the back of the diversification play. And then on top of all of that, you have the other attributes that make it so useful. So I'm biased here, but it's tailwind after tailwind after tailwind in my head.
Thank you. Blake has a question about VeChain. Any thoughts on VeChain? Now, remember, we're not advising anyone to buy, sell, get involved, get engaged, trade, et cetera, et cetera, et cetera. Casual conversation, thoughts about VeChain?
I like VeChain. I'm not giving financial advice, obviously, but I like them. It's a non-fungible token, and there's a lot of companies out here really interested in using them. It's going to be used to make sure. Just a good use case is like knockoff of big products, right? So Nike could use it. You could scan their shoe and make sure you got an authentic Nike Air Jordan, right? It's just, it has an incredible practical use case. And I think to the point that we had earlier that Miguel made about the metals, but then you saw the chart with the different metals on it and gold off to the side. I think, and even to what Bing was talking about, opening up that pie of a hedge, I think we're going to get, because the watermark is reaching an inflection point with crypto, that we're about to see these different segmented areas of what these things actually are and what purpose they serve, right? So, platinum's platinum, silver, gold's gold, Bitcoin's Bitcoin, Ethereum, smart contracts, you know what I mean? The store of value for Bitcoin, and then coming over to payments and back-end settlement for like XRP, use case utility. I think those things really help mature the market and give it a better, clearer picture. So the hedge pie might not grow as much as people think if these other things have different purposes and use cases, right? So just a thought on that.
Thank you. There's a question. I'm just going to ask this. I'm going to respond to this question before I take the next question. Yeah, so the question was, will Link2 ever offer under $10,000 for unaccredited investors? And really, no, it's regulation, so we actually can't do anything for unaccredited investors, and so that's we're playing within those guidelines. So thank you for the question, and I hope that answer is good for you. And so, is there anyone else? Did Steve have a question out there, Steve? No.
Okay, it took me a while to find the mic symbol here. Okay, first of all, greetings from Luxembourg, also called Silicon Luxembourg now, because we have a Ripple office here, and there's Microsoft as well, and there's many firms. Also, PayPal is based in Luxembourg. Although we don't really have silicon here, but so much about marketing. I'm so glad to see all of you. And I must say that I met Joe on the phone because 3 months ago I invested in Ripple as an alternative to just having XRP accessible till then for me. So it took a while, so I could step up to also buy some shares in the company. One thing I was put back a little bit. Like 2 weeks ago, I wanted, or just this week, sorry, wanted to take part in Swell as well, and I requested to have an invite there, and it wasn't possible, even though I bought some shares in the company. Actually, probably I didn't cross the trust line and regarding the number of shares that I bought. I'm not sure about that. But yeah, I'm trying to follow everything that I can track as possible factors to understand what is going on in the background and so on related to XRP and also to other cryptos. Also cryptos tied to XRP like CSC or the casino coin, and also maybe Sologenic as well.
Thank you, Steve. So here, might be interesting for you to, I don't know if you've already registered for the next Global Investor Conference, which is December 8th and 9th. Actually, we just confirmed CEO and co-founder of BRD. BRD has a great app. And the president, Adam Trademan, actually is working with SBI, and he's working with SBI RippleNet. So that might be an SBI mining. So that'll be an interesting conference for you to join and listen to some of the speakers there as well. From Doris, we have a question. I think this is for Brad. Greetings from Foster City, California, near San Francisco. Welcome, Doris. Thank you so much. Question is, which brokerage firms offer crypto trades such as buy Bitcoin?
Which brokerages? I don't know the answer. I do not know that in my best Ed McMahon.
Okay, there we go. Doris stumped
Yeah.
everybody. Who's got an answer to that?
If I may ask, okay, so where is an easy place to purchase or sell, to trade Bitcoin or the main cryptocurrencies?
Oh, I'm sorry. I misunderstood your question. You could go, you're here in the States, right, Doris?
Yes.
Okay, so you could most people use like Uphold, or you could use Coinbase, any of those exchanges. There's Binance America. Either one of those you could register just like you would register at Fidelity, right?
Yeah. Kraken
But
as well.
do any of the brokerage firms
Yep, Kraken too.
recognize it? Like TD Ameritrade or Schwab or any of them that we know?
I don't think so. I don't think so. Joe, is that right? I don't think they do at this point.
Yeah, Brad. None of the sort of established brokerage firms do it, Doris. I think if you wanted to try somebody that's a little bit of a renegade but has a very large customer base as a broker, go to Robinhood. I think they were planning to get into it or may already have. I don't know. I don't have an account at Robinhood, but if there was anybody that was of that scale that'd be doing it first, it would likely be them, Doris.
Yeah, maybe some of the fintechs. Okay, thank you.
So thank you for that question. What we should do actually is do some research on that and figure out some answers for, I mean, that's a good question. We'll get some answers for you, Doris, and for the rest of the group here, and we'll post whatever we get.
Yeah, I was gonna say Robinhood definitely has it. I just put it up.
We're getting to 1 of 5. I want to thank the folks that are on the line. Thank you, Brad. Thank you, Miguel. That's so much information, so useful, so helpful. I don't know if we covered a lot of what we wanted to cover in terms of depth. We may have you guys back if that's open to you and get some more details. The rest of you, if you felt that we missed some important points or you'd like to learn more about a particular vertical, let us know. Email us, tweet us, Facebook us, or one of those things, LinkedIn us or something. Let us know what questions you have and what we want to explore in terms of topics and subjects. 2 things, join us for our next Lunch and Learn. I think we're going to post 2 URLs right now on the chat, which is our next Lunch and Learn, and we're going to post the Global Investor Conference that's coming up in December. That should be exciting. We've got 13 panelists so far. It's going to be a diversity of topics. We have Jesse Draper on. She'll be talking about women in Bitcoin, women in crypto. Again, I mentioned Adam will be talking about some of the beautiful things that they're doing on their app with crypto trading. We're going to have JP of Uphold, he'll be there. Greg Kidd is going to be there. So join us for those events, spread the word, let us know what else we should be covering at these Lunch and Learns, and thank you so much for being here today.
Yeah, thank you, Karim. Thanks for putting it together.
Yeah, thank you guys. Thank you so much.
We'll also have this recording of this if you'd like to watch it again or share it with anyone on our YouTube channel by the end of the day today.
Wonderful. Thank you,
Awesome.
guys.
Thank you.
Thank you, gents. Appreciate it.
Take
Bye,
care.
everybody.
Staring out my window, I got the formula, stacked them bags up and simple, and wait until we explode. I'll meet you at the disco. We just getting started like an intro. 589 and numbers, please call our bingo. We the new heroes. Them trash coins you held went to 0. They done fell below. When we held, they called us weirdos. But what they gonna say though? When clock ticking, ticking like tick-tock, moon suit. We about to lift off, tick-tock. Got you looking at your wristwatch. Don't hip-hop, cause we about to moonshot.
Time is ticking, you're still supporting people that chilling, praying that the coins you're buying is the winning. Sitting in your car, wasting time for moving, tick-tocking. Brain is on flood, clogging up your crypto vision. Negative vibrations messing up your soul mission. They say patience is a virtue, but your weak hands got you lose hope and pushes you in the end of your rope.
Clock ticking, ticking like tick-tock, moon suit. We about to lift off. Tick tock, got you looking at your wristwatch. Don't hip hop, cause we about to moonshot. Bag stuffed to the tip top. Not much time left on the clock, going tick tock. Got my bags packed and my keys locked. Headed for the moonshot, you not ready in this moon o'clock. Look at me as we boosting off. I told you so, now we at the top. Champagne pouring, pop the top. I double down, I got my sparks dropped. We at the XRP money swap. By the island hop, bags make your head pop. Clock ticking, ticking like tick tock. Moon suit, we about to lift off. Tick tock, got you looking at your wristwatch. Don't hip hop, cause we about to moonshot.
It's Lady E here in motion, following intuition and not emotions. I'm rapping all the women of Crypto Nation, manifesting my crypto goal to come in fruition. I'm buying dips, holding strong, but not for long. Soon I'll be island hopping, moon gazing, seeing that the moon shot is coming. Crypto vision so bright, I can see the sun shining from a mile.
Clock ticking, ticking like tick tock. Moon suit, we about to lift off. Tick tock, got you looking at your wristwatch. Don't hip hop, cause we about to moonshot. Governments print them dollar bills, and they shoot to kill. Always gotta keep it real, only eating red pills. When them candles turn red, no I'm buying it. Got some cash on the side just to buy the dip. Loading up my bags now in the rocket ship. The XRP fam here and they hopping in. Pushing buttons in the cockpit. Lady E on the track and we rocking it. Pulling up now on the cosmic strip. Clock ticking, ticking like tick tock. Moon suit, we about to lift off. Tick tock, got you looking at your wristwatch. Don't hip hop, cause we about to moonshot.
Energy levels rising, my heart's pounding, saying tick tock, no more time wasting, just start blazing. Million bags over here, high vibing, and we soon going mooning. Lady E here bouncing up, bouncing up, bouncing up.
And when we blow, ain't no told you so's. I'm a big ghost. I'm a big ghost. We hold the gold. I be super bullish like the bearable bull. My lifeboat full, ready for the big boom. Astronaut suit, headed for the moon. With my whole gang crew, had the 2020 vision, yeah we all knew. Now we pulling up in something brand new. New house on the avenue, beach house and cabin too. Normally I don't flex, but I had to go all out. You said it couldn't happen, now we floating through the clouds. You see us popping off, you be like, holy cow. I missed the showdown, ain't no getting in now. Shooting past the moon plow. Welcome all the kings and the queens to the new town. And we all loud, party last all year round. XRP hold us down, and we got the new crown. So you bow down, we hold the gold. And when we blow, ain't no told you so's. I'm a big ghost. I'm a big ghost. We renegade, we hold the change. The phoenix gonna reign, can't change our ways. To the end of days. To the end of days. Chillin' on a boat with a rum and coke. Or I be on an island, shining like a diamond. XRP got extras, cruising in a Tesla. I told you like professors, it's chess not checkers. You folded under pressure, but pressure make diamonds. Now you see me flying, and Bitcoin dying. You didn't hear the siren, we taking off, we skying. I bought more, I'm buying. I'm talking about that tiger, I'm talking about that lion. That XRP giant, you didn't buy, you crying. I'm sorry, no, I'm lying. Bags full, no denying. school, no denying. We hold the gold, and when we blow, ain't no torture souls. I'm a big ghost. I'm a big ghost. We renegades, we hold the change. The phoenix gonna reign, can't change our ways. To the end of days. To the end of days.